All right, let's get right into it. On January 15th, one of the most powerful firms on Wall Street is set to make a call that could create some serious waves in the crypto world. And what's at stake here isn't just the future of a few companies, it's about how the entire financial establishment is going to view Bitcoin as a corporate asset.
And yeah, the stakes are massive. We are talking about a potential tidal wave of forced selling, estimated to be as high as $15 billion. Now, this isn't your everyday market swing. This is a single corporate decision that could force index funds to dump huge positions whether they want to or not.
So that really gets us to the big question, right? How did we even get here? And why does the opinion of just one company have so much sway over this whole new class of businesses built around Bitcoin? Let's break it all down.
To really get this story, you first have to understand the huge and frankly often invisible power of the first major player in all of this, the index provider, MSCI.
Okay, so think of MSCI as like the ultimate bouncer for the biggest club on Wall Street. They don't own the club, but they control the guest list. And that guest list is their incredibly influential stock indexes. If you're a company that makes it onto their list, say the MSCI World Index, then tons of investment funds pretty much have to buy your stock. But if you get kicked out, well, you can imagine what happens. And believe me, their guest list is a very big deal. Over $18.3 trillion in assets are benchmarked to MSCI indexes. That's trillion with a T. So when MSCI decides to change the rules, that massive pool of money has to react, which makes their decisions just incredibly important for markets all over the world.
Now, let's flip over to the other side of this story. Because while MSCI kind of represents the old guard of finance, there's this new, disruptive group of companies that's really challenging how things are done.
And these are what people are calling Bitcoin Treasury companies. You probably heard of the most famous one, Strategy Inc., which used to be called MicroStrategy. Now, instead of holding boring old cash or bonds in their corporate treasury, these pioneers made a really bold move. They hold Bitcoin as their main reserve asset. They're betting its long-term value is going to crush traditional holdings.
You know, the thing that really defines these companies is just how tightly their stock prices are glued to the price of Bitcoin. I mean, because they hold so much of it on their balance sheets, their stocks have basically become a stand-in for Bitcoin itself. When Bitcoin moons, they moon. And when Bitcoin takes a dive, well, they go right down with it.
So just how linked are we talking? Well, let's take Strategy. Studies show that for every 1% move in the price of Bitcoin, Strategy's stock moves, on average, 1.37% in that same direction. It's basically a leveraged play on Bitcoin, and that's super attractive to investors who want that extra bit of exposure without actually having to buy the crypto themselves.
And this, right here, is where our two worlds smash into each other. This super tight link to Bitcoin has put these companies on a collision course with Wall Street's gatekeeper, and it's led to a proposal that has drawn a very clear line in the sand.
So here's a quick look at how this all played out. It kicked off back on October 10th, 2025, when MSCI first floated this controversial idea. Then, things got real in November when a JP Morgan report came out and really put a number on the potential damage. After a feedback period that ended right on New Year's Eve, the clock is now ticking down to that big January 15th decision, with any changes happening as soon as February.
So, what is this proposal? It's actually pretty simple, but it's also incredibly harsh. They want to kick any company out of their major indexes if 50% or more of its total assets are in digital assets like Bitcoin. MSCI's reasoning is that these companies are acting more like investment funds than regular businesses, and so they just don't belong in their mainstream indexes.
And make no mistake, this is not a small tweak. This proposal is targeting 39 companies with a combined market cap of over $113 billion. But look at how concentrated this is. Strategy alone accounts for almost 75% of that entire value. And with 92% of the affected money being based in the US, it's pretty clear this decision is aimed squarely at the American market.
Now, when you're faced with a threat this big, you don't just sit there and take it. The crypto industry and its allies mobilized, and they did it fast, launching an organized campaign to fight this proposal head-on.
So you've got this fundamental disagreement. MSCI is saying, hey, these look and act like funds. But the industry is pushing back hard. saying, no, 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 we are legitimate operating companies. We're software companies, we're miners. We've just chosen a really innovative way to manage our treasury. It's a clash of worldviews with billions and billions of dollars hanging in the balance.
The opponents have laid out some really strong arguments. First, they say there's just no precedent for this. I mean, you don't see companies getting kicked out for holding tons of real estate or gold. They're calling the rule discriminatory, arguing it would force all these passive funds into costly and totally unnecessary trades. And at the end of the day, it just violates the core idea of what an index is supposed to be: neutral and representative of the market.
George Mikhail, who's the head of a group called Bitcoin for Corporations that's leading this fight, really hit the nail on the head. He said, I think a lot of this just really has to do with a lack of education and understanding of Bitcoin itself, as well as these Bitcoin treasury companies. He thinks it's not that MSCI is being malicious, it's just a profound misunderstanding, a huge education gap that still exists between crypto and traditional finance.
And all of this brings us to the final and most critical question. The arguments have been made, the deadline is right around the corner, so what are the possible outcomes of this financial showdown? Well, there are really three ways this can go. First, the worst-case scenario for the industry: the proposal gets approved and that wave of forced selling starts. Second, a delay. MSCI could just kick the can down the road to do more homework, and a lot of people think this is the most likely path. And third, the absolute best-case scenario: MSCI withdraws the proposal completely, which would be a massive victory for these Bitcoin pioneers.
So, what's the market betting on? Well, if you look at prediction markets like Polymarket, the odds are heavily stacked in favor of exclusion. Right now, they're giving it a 77% chance that Strategy, the biggest fish in this pond, is going to get dropped by MSCI by the end of March. So yeah, the market is definitely bracing for a big disruption. At the end of the day, this entire debate really boils down to one fundamental question. Is MSCI putting up a necessary guardrail to protect investors from a risk they don't fully understand, or are they just building a giant roadblock that punishes financial innovation and fundamentally misunderstands a new asset class? The answer is going to have consequences that ripple out for years to come.
And that's our deep dive for today. If you want to stay on top of huge stories like this one, make sure you hit that like button, share this with a friend, and subscribe to Crypto Explorer 24/7. Thanks for tuning in.